Hello and welcome to a special economist roundtable on ET Now, and this is happening just ahead of budget. We are at a time where the growth is high and inflation is low. But what does the big picture say before budget? To have a discussion on this, we have a power-packed panel. We have Indranil Pan, we have Anita Rangan, we have Gaura Sen Gupta, and as well as Indranil Pan and Sameer Narang as well. But let me start with you, Sameer. What does the big picture say? Do you think that at least the fisc is going to be protected?
Well, a very interesting question to start the discussion. I think I would agree with you that the underlying emphasis would be that we need to continue on a fiscal consolidation path. The anchor of fiscal policy has changed from fiscal deficit to debt to GDP. And the finance minister had indicated that the government is looking at 50% plus minus 1% of GDP as the overall debt to GDP for the center. And states also need to have a fiscal glide path accordingly. And as per that glide path, at least 1% of GDP every year, the debt to GDP needs to come down from 56% to 50 plus minus 1% by 2031. So that roadmap will be adhered to, and the finance minister will work on the overall numbers on expenditure basis the revenue constraints that we are facing this year.
Right. Indranil, I want to come to you. When we talk about the targets which has been achieved in past few budgets as far as fiscal deficit is concerned, this time it is kind of a catch-22 situation. On one hand, the growth picture is, of course, looking bright. If you talk about the GDP numbers, headline numbers per se, and overall, even for spending, government has already given push. How do you think the balance can be maintained this time?
Well, I think in terms of the growth inflation matrix, we are all talking about a Goldilocks situation.
Yes, that's what the RBI governor said also.
Yes. So without trying to doubt that, I think we will have a clearer picture when the new base series actually comes out. So that's the point in time when at least I am expecting that inflation will relatively be on the higher side. Now the perspective is that a developing country like India, a very low inflation is something which is a question mark to me, which means that somewhere we don't have that adequate demand push in the economy. And therefore, in that context, the growth looks slightly outsized. Now, the budget, therefore, the backdrop of the budget, therefore, is this. The second thing is, as Sameer rightly pointed out, we need to continue to stick to our fiscal targets, mainly because also they need to create space for the CPC, which is likely to hit next year. And we really don't know what is a realistic budget for that. So that's the second thing. Now, internally within the budget, I am slightly not in favor of any further significant push towards capital expenditure, because I think, yes, it has done its job. It has run its course. The intended kick-in for the private investment has not been happening. And now the government needs to turn its focus more on the R&D side, because now the challenge is global rather than domestic. And therefore, we need to get our industries working in a way that we funnel the export channel ex-US in a more significant way, rather than only providing the push to the domestic. On the domestic side, I think they have actually done adequately. And first of all, again, budgets were more interesting previously because we used to look at the excise changes, VATs, and all everything the implication for the industries. Today, that indirect tax is totally away from the budget, and we talk only about the direct taxes. Last budget, we have done the direct taxes, and I don't think we can afford to do anything in this budget.
Right. So that's a word from Indranil. Gaura, what do you think after GST push which has already been given? We understand that 50,000 crore is the hit. Do you think the discipline is going to be maintained, or do you think some room can be taken this time?
So I think the center has been very disciplined in the way they have approached the post-COVID. So we've already gone on a fiscal consolidation light path. So we've got it down from a peak of almost 9% fiscal deficit to around now 4.4 for FY26, and for the next year we do expect them to get it to around a 4.2 to 4.3. And the move to debt to GDP targeting, basically the government is telling us that the pace of consolidation, at least at the center level, will now slow down, which makes sense because as a developing economy, we need to also prioritize growth support. And the revenue challenge remains. Every single time the budget is presented, there is always a limited space. So, for example, 50 to 60% of total expenditures, already committed expenditures, such as pension, wages, subsidies, and interest costs. So they have a very limited room within which they can basically support growth. So a more gradual pace of fiscal consolidation is what is required. I think the key challenge for the budget will be to somehow crowd in private capex, which is still tentative, also get FDI investments. We are getting gross inflows, but we are losing a lot of that in repatriation. And the most important challenge for the budget is how they'll fund it. So even if, let's say, they target a very prudent fiscal deficit of 4.2 to 4.3% of GDP, the gross issuance, how they fund that via the bond issuance, is going to be the major issue because we've got massive redemption pressure. So if you take a 4.3 fiscal deficit, your gross issuance can be around 17 trillion rupees or 16.5 to 17 trillion from the center alone because of the redemption pressure. So how to ensure that there is no further upward pressure on the bond market, which is also, I would say, another very important medium for transmission, the bond market, the corporate, the GSEC market, the corporate bond market. And that's the major issue, how they will fund that 4.2.
Definitely, that will be something to be watched out for in the budget. And Anita, what is your view in fiscal maths this time? Do you think the headline story will change this time, or you think that will going to be retained like it has been done in past 3 years?
See, headline story, I think we need to move beyond the headlines into the details. So what's there in the detail, I feel every year is they are lacking in terms of execution. The pace of execution is lacking. First of all, you see, for example, let's just take the capex trend, okay? So it's about, 10.5 lakh crores, give or take, you announce. But then a month you do like 1.5, and the second month you do like 40,000 crores. So that's, first of all, it's very uneven in terms of pace. There is no visibility. So what that tells me is that you're spending based on what revenue you're getting. So that's not how, an economy functions, right? You don't spend based on every month you get the revenue, which means that businesses lose visibility in terms of how they plan their contracts with the government and so on. So there is a bit of loss of confidence. So from the revenue side, one is the execution. From the revenue side, if you go back and see, people talk of direct taxes, indirect taxes. There's RBI dividend, which has come to the hilt. I don't think RBI can do more, and RBI is not an institution that actually is like a revenue generating institution for the economy per se.
It is
they are a
filling
regulator.
For the shortfall.
Exactly, they are a regulator. So what's the missing gap? I think divestments. Just let's go back in time, FY22, a big bang budget, government did propose a big strategic roadmap in terms of divestment, right? And that time they proposed 1.75 lakh crores of divestments. Before that year, it was 2 lakhs. But what do you see in terms of execution? Barely 40,000 crores. But there was a plan. Central government will actually keep only minimum in presence in the PSUs and all other sectors, and then outline the list of sectors as well in FY22. That's gone into cold storage. And we're just waiting. I mean, what was the need to put that into cold storage? I cannot figure out, right?
That is a stated policy of the government now. They will not announce any kind of target for divestment now. And they will do it as and when it is fructified. But in terms of capex, you raised a valid point, and I want to get your sense also, Samir, on this. Do you think this needs to be enhanced much more than it is happening? Because anyways, we are not completing the target. First and foremost, last time it was election year, so it could not happen. This year's pace, keeping in mind, you think that you are going to have big bang kind of a capex?
So you're absolutely right. So there are two ways to look at it. First of all, you spoke on the election bit. After that, capex has picked up. So even this year, FITD, capex is up 28% by the central government. But if you look at from a percentage of GDP point of view, it's stabilized around 3% of GDP. And pre-pandemic, this number used to be around 1.5% of GDP. So this has doubled as a percentage of GDP over a 5-year period. And in between, we had seen a 25 to 30% CAGR. Last 2 years, growth rate has dropped, but we should also remember that last 2 years, nominal GDP growth rate has dropped from it was 9.8% last year and expected to be 8% this year. So when you juxtapose that with the capex and the revenue that the government is getting, you realize that the government is still doing 3% of GDP. Now, is there room to do more or not is the big question. So if you start doing it more, then either you need to get more revenues or you need to spend more. If you spend more, you need to borrow more. If you borrow more, interest rates go up. If you want more revenue, you have to tax more. If you tax more, people will spend less. So I think in the last 2 budgets, the stated policy from the government is that they want to let more money in the hand of people for spending, for consumption to pick up, which will lead to higher capacity utilization and a pickup in private sector capex. Are we seeing some green shoots out there? Yes. If you see the announcements this year from manufacturing sector, 9 months up to date, they are the highest you've seen in the last 5 years. So there are certain things that are working. Policy making is a slow grind. It works with a lag. I think the government has taken a policy stand in which they would put more money in the hands of the consumer via direct and indirect tax cuts. They need to maintain that policy, and private sector capex will pick up with a lag.
All right, so that is the expectation. We'll continue with this discussion, but this is the time to take a quick break, and don't go away. This discussion on budget by 4 wise guests will continue. Welcome back after the break. We are doing an economist roundtable before the budget, and the big question this time is, what is going to be the theme of budget? So before we move forward on other aspects of economy, let's get a sense on that. First of all, Indranil, what is your sense? What is going to be the big picture?
Well, as I did say that the critical challenge is the coordination of the GDP and the IIP and the inflation. Now, the critical issue with India, in my opinion, is we keep talking about we are the 3rd largest, 4th largest, but I think the critical issue is we are, as Indians, caught in the middle income trap. So we need employment, we need that income generating power rather than dole outs of the states to run the economy. States and the center taken together.
Right.
So we need not be an economy which gives and provides free PDS food grain. We need, therefore, the per capita income to grow as smartly as we are seeing the GDP to grow. Now, in that attempt, I think the critical things that are missing, and I agree that these are very challenging issues because some of these are also in the concurrent list, which includes the healthcare, which includes the education. I did also say that the reliability on how incrementally your capital investments by building roads, etc. Because you always have a critical landmass which you can attack. You can't continue to expand that there's a bliss point out there. So you now need to shift your investments to, say, healthcare, to education, R&D. You are one of the largest producers in many crops, but your productivity in the pecking order is about 4th or 5th. Why can't we be productivity-wise higher and therefore generate income in the economy? So that, I think, should be the critical theme which should drive us towards the Viksit Bharat.
Right. Gaurav, what do you think this time is going to be the headline for the budget? Do you think Trump effect is going to be a major part?
No, I think the good part is in FY26, thanks to the front loading of our exports to the US, we have not really seen a negative impact. The challenge is if we don't get a trade deal and we still are stuck with 50% tariffs next year, what do we do? So already you are beginning to see, at least from the merchandise side, that India is beginning to diversify the export markets. We are actually exporting more to China which is an interesting aspect. So as our exports to US has slowed down, our exports to China is picking up. You look at our trade deficit, it has stayed very contained. I think from a tariff perspective, the focus of the budget will have to be how to enable MSMEs, which are 40 to 50% of your total merchandise exports, to diversify the export markets, how to provide them funding for that. And I think the real risk is from services. 60% of our software services just go to the US. We are highly concentrated and dependent on the US when it comes to software services. And for now, the trade issue is only on the merchandise. It's not gone to the services. So how we diversify that aspect. But I agree with Indranil. I think the main question for India to solve, not just this year, but every year, is how do we create more jobs, and also the kind of jobs, the wage growth, the fact that we've got a working age population that is going to grow for the next 10 years, and we are the only demographic from that, only country that has that positive demographic. To really unlock the demographic dividend, you require job creation. And for that, you require not just companies to create jobs, but you also need to ensure that the people who are in the labor force are equipped or skilled to meet the changing dynamics. Because with all the technological changes, you've got new modern sectors coming up. You have to ensure that the people that are joining the labor force have the skill set to be employed. And also, I think that the other challenge from an exporter perspective is how do you incentivize industries to scale up? Majority of Indian companies are small, MSME. After agriculture, it is MSME, which is a major employer. So how do you incentivize them to scale up their operations, because that's the only way you get productivity. And in that context, what the government has done with the labor codes will be quite beneficial.
Right. Anita, what is your sense in this direction for this particular budget? Spending is something which is lacking?
I would say, again, spending definitely is lacking because most of the money, what Gaurav also said, goes into interest, subsidies, pensions and pay, right? So what is left for discretionary spending is very limited in that sense. But I think what government should also do is take the bold step and spend, because that spending will automatically create revenue, right? So it's a circular loop. And when we talk of nominal GDP growth being 8% and so on, we can, keep the discussion between real and nominal. But if nominal GDP, say we take that number and 8%, if economy is growing at 8% in nominal terms, which means there is a challenge in terms of revenue side, which income and corporate tax revenues, which we are already seeing, right? So what they can do in terms of spending, therefore, is, spend the more discretionary component more aggressively, because you can't do much about interest and pay. So if you spend, for example, the rural water program, 80-85% is complete, and they've announced that they're extending it from 5 years to at least till 2028. Urban water mission is not, it was announced but not fructified yet. Many of the infrastructure plans and programs which get announced but don't get fructified because of lack of space in the budget is what I think should be done. Because see, GST is a very beautiful thing that they gave, right? So many cars got sold after GST.
Right.
But brilliant. But where is the infrastructure? I mean, if 10% even cars get, continuously sold more, you need more infrastructure. You need to think ahead in that sense. I think that's where your productivity gains and all will start coming up. I think the other point also is on the agri side, which they talked about. See, what I think, if you relate to the cropping data, sowing data, Kharif and Rabi, aggregate sowing is just less than 1%. What that tells you is possibly that even farmers don't incentivize themselves to produce more. Agricultural yields are low. You see that in the sowing data with low MSPs, or not MSPs, low farm prices, which means that agricultural income is also low.
Right.
So that's another area which possibly, what are the non-agricultural sources which government can think of in terms of sources that they can think
and
about.
Now that leads to the one last question for all of you, because there is a paucity of time and I will try to conduct it like a rapid fire. What is one kind of bouncer you think surprise is going to be there in the budget, starting from you, Samir?
I think the something that people are not talking about as of now is the implementation of the Finance Commission. So that leads to much more devolution for the states if it is implemented.
Right.
And that also implies that there will be more responsibility for states to spend, and we are already seeing that when the employment bill was passed.
Sorry to interrupt you. I just want to take everybody's sense in one word, if anybody can say.
Maybe a capex build-up once again,
Okay.
which is, of course, not my sort of ideation, but
Okay.
that's the surprise that
Right.
we can see.
Right. Gaura?
I would also say how they are able to diversify where they are focusing their investments. Beyond road and railways, there is a great need to focus on other sectors also.
All right, so there is a lot of ground which needs to be covered by the finance minister when she is going to present the budget. But thank you so much, Sameer, Anita, Gaura, as well as Indranil for joining and expressing your views.